The European Central Bank has erred on the side of caution and on the back of what's maybe a less rosy global picture. Alastair McCaig, Fern Wealth. US jobless claims decreased by 4,000 to 232,000 in last week, below expectations of 240,000. This week has also seen significant developments in the FBI case with Donald Trump. So Alastair, in your opinion, what has been more dollar detrimental this week?
I think over the course of this week, we've seen an escalation of fears about the Trump administration's ability to push through many of the projects that they were looking to do. Specifically, we're talking about infrastructure spending, we're talking about tax reforms, and we're also talking about cutting of red tape. And none of those projects are at the forefront of the Trump administration's agenda at the moment, and it effectively is a lot of firefighting. Now, over the last 2 or 3 months, we've seen a sizable migration of fund money leaving US investments and heading over to Europe. And I think what we've seen crystallize over the course of this week has been more of a sharpening of focus as far as equity markets and equity indices are concerned. And we've seen a lot of the froth and blue sky that had been built into expectations of what the Trump administration were going to do finally leave the table.
US instability is also impacting European leaders and officials, alongside Britain's exit from the EU and China's economy. ECB meeting minutes release showed further changes will be very gradual and very cautious manner. So was this caution from the ECB a surprise?
Well, it's not too surprising that the ECB are putting a cautionary tone to their notes and their minutes. I think that the US, when they tapered their quantitative easing scheme, they went through a process whereby they talked about tapering for a long time prior to actually embarking upon it, and it looks like that template is being utilized by the European Central Bank. That being said as well, when we look at a lot of the data that's coming out of the US, we're seeing some pretty good soft data, the corporate figures coming out of, broadly speaking, being pretty good over the last month and a half. But a lot of the hard data, the actual economic data, isn't quite as supportive. And I think we've seen that being reflected in certainly FX markets, where the expectations of a June interest rate rise in the US, which had been fully factored in almost, that the odds of that have been diminished somewhat, certainly as far as market reaction is concerned. And I think that the European Central Bank have maybe just erred on the side of caution on the back of what is maybe a less rosy-looking global picture.
The sterling climbed after reports showed UK retail sales gained more than economists expected, breaking through levels not seen since May announced the snap election. So is data driving the sterling higher, and has the sterling become less election dependent?
I think it would be fair to say that sterling had been oversold against most currencies since the announcement of Brexit, and a lot of the fears that many financial institutions and investors had been most clearly demonstrated in the FX market as opposed to, say, equity markets. And I think that we maybe had reached a saturation point as far as the negativity towards sterling was concerned. There are a lot of hurdles that the UK is still going to have to clear as far as Brexit negotiations are concerned. And I think the dampening of enthusiasm about the US political scene has helped rebalance cable and seen sterling US dollar stick its head back above that 130 level. How much more upside potential there is, I think, is going to be driven by the US side of the equation as opposed to the UK. I think Theresa May, certainly as far as the polls are concerned, has a pretty healthy lead, and barring some pretty calamitous actions by the Tory party, should see the election go her way later on in the year. And that, broadly speaking, means that the UK government, the Conservative government, assuming they come to power, should have a stronger platform with which to A, negotiate with Europe, and B, push through their own agenda. And I think it's that sort of solid base of a bit more clarity that the markets will be encouraged to see.
Well, Alastair, thank you for your insights. That's all from me. We'll be back on our week ahead on Monday, so see you all then.